I knew that I was already setting myself up to be in a not such a great place. And I, reading that book just helped click things for me where it was like, I can be an entrepreneur and I can take care of my own investments, and I already like real estate. This is what I'm going to do.
If you're watching this on YouTube, make sure you smash that like button and click subscribe. For those of you listening on a podcast platform, be sure to subscribe on whatever platform that is and leave us a rating if you can. The more likes, ratings, and subscriptions that we get, the more we can spread the message and grow our community. So we also have a free Facebook group. It's called the Average Joe Finances Network. Check us out, join the group, join the community, ask questions, and become a part of the team. All of our other social media accounts are listed in our flow page, and we have them in the video or podcast description below.
Hey, how's it going, everybody? So today's guest is Nathan Webb, and he's a husband, a father of four, an investor, entrepreneur, real estate professional, and a 1031 exchange accommodator. He started and sold 2 businesses in the Middle East before moving back to the States and getting into real estate full time. He's currently licensed in California and Georgia, and spends most of his time looking at real estate. He works to grow his investment portfolio along with his wife and some close friends. He's helping to grow a privately held real estate investment trust as they approach $4 billion in assets under management, and is consistently shuffling 1031 exchanges through. Nathan is passionate about helping investors understand the power of the 1031 exchange so they can use it to their full advantage. So Nathan, really excited to talk about this topic with you today. Thanks for joining me on the show.
Thanks for having me, Mike. It's a pleasure.
All right, awesome. Hey, so I want to start this off the same way I start every show off. And that's, we want to know a little bit more about you. So I shared that little bit in your background, but can you get into a little bit more detail and tell us how you got started? What kicked this off for you?
Well, as you kind of covered, I had a couple of businesses overseas in the Middle East that I ended up selling. But what was interesting, so I had a gym and we were running the day-to-day operations of a gym, and we were contracted out to actually build some out. People loved our gym so much. They said, hey, we're going to contract you guys out to build our gymnasiums up because we have these old buildings. They're just open spaces. We want to build a gym out of it. We love what you guys did. So, hey, why don't you come do this for us? So that is kind of where, after building our own gym, I loved doing the project management. I loved making sure that everything was outfitted correctly and looking good. So then doing that for some other private contracts it was something I really liked. So it was like a spin-off business from what we initially created. And it was something that I just fell in love with, the project management, taking something that was run down and just kind of nothing into something that was a performing business. And so that's really what kind of culminated my love of real estate, even though I grew up working with my dad doing some construction. This was really what kind of brought it all about, seeing the big picture take place and going from beginning to end that really solidified that love of real estate for me.
Awesome, man. So you said you grew up in construction, right? So you already had a good feel for how all that worked. And, getting involved in like rebuilding these buildings into gyms, just that whole thing about taking something and changing it into something totally different is something that's pretty enjoyable to watch as you get through and make the project happen. So falling in love with project management is probably something you have to do if you're going to do a lot of renovations on any type of real estate, no matter what it is. If you're not loving the project, you're not going to be enjoying yourself too much. So that's awesome, man. So you talked about how, this is how you got started. You had the businesses, you had the gyms, you rebuilt those buildings. What else are you doing like on your own personal journey to or in financial freedom? Like what are you getting yourself involved in with your investing?
So kind of interesting point you brought up there was, I was doing the entrepreneur thing. I was doing the real estate on the project management side. I mean, I really love taking things from beginning to end. But honestly, doing this overseas, and there was just a lot of finances. It was quite expensive to live over there and run our business. And while we, ran a successful business and I was well paid for what I did, because I was a partner, it was just like, this is not something that is going to fulfill my retirement. I didn't have a 401k. I didn't have any, investment strategies or financial advisor over there. It was just like pulling myself up by the bootstraps, doing the entrepreneur thing, growing my family. And so it was actually while I was overseas that I started reading Rich Dad Poor Dad. You hear a lot about it, and I mean, it seems so cliche, but really what it was it changed my thinking in terms of investment. It was no longer, hey, work really hard, have this business, and that's how you're going to retire, or your job is going to take care of you. You're going to have this 401k. I knew that I was already setting myself up to be in a not such a great place. And I, reading that book just helped click things for me, where it was like, I can be an entrepreneur and I can take care of my own investments, and I already like real estate. This is what I'm going to do. I also had this mentality, this spirit, I guess you could say, that I had to do this quite intensely. I couldn't just kind of, I had to really put into it and take, maybe you could say, take a little more risk, but just approach it more aggressively to make the things happen that I wanted to happen. But it really did. It kind of started with that book, and it's grown from there.
Yeah, it's funny. You call that book, which is well known as the Purple Bible, right? You call it cliche, right? But I got to tell you, a lot of people, when they talk about what's the book that got them started into real estate, for most people, it's Rich Dad Poor Dad. Now, the other thing about it, though, is it's not the best real estate book. However, what it does, especially for somebody who's just looking to get started, or somebody um, that knows that this is the route they want to go, it builds on passion. It helps you change your mindset. It helps you get you thinking in the terms of an entrepreneur, like somebody who is going to be business minded and go out and conquer your goals, right? And at least that's what the book did for me. It changed the way I look at things, not just real estate, but my business in general, right? And how I promote myself and promote my own business. And that book is definitely it's a foundation. I would call it a foundational book. So right on, man. So after that, so I know you got your real estate license, right? Both in California and in Georgia. So where did that come into play after you sold your businesses and you came back? What made you get your real estate license?
Yeah, well, I had no real ambitions. I knew I wanted to invest in real estate. I knew I didn't need my real estate license to do that. I think it was more just a matter of when I left the Middle East, it was kind of it wasn't a business problem. It was more just like residency and dealing with all of the red tape that came with being a foreigner in a foreign country running an international business. And it just got to be too much of a headache with a family. And I was like, we're going to go back to the United States. My wife's from California, so we went back to Los Angeles. And, I just said, hey, I'm going to look into this real estate thing, but I'm going to, pursue, what I've been doing in managing a gym. And I was going to get a job doing that. And I actually, my appendix ruptured, and it ruptured so bad that I had to have not a minor surgery, but where they went in laparoscopically, but they actually had to cut me open and do some repairs. And because of that, I was basically kind of bedridden for 3 months. And I just said, well, I'm just going to take this time and I'm just going to get my license. And so it was, I wouldn't say it was forced, but it was an opportunity, and I just got it. And then was able to land a job working for a family office doing multifamily acquisitions and property management, project management. We'd buy the properties, we'd renovate them, we'd lease them up, we'd sell them. Some of them we'd hold on to. We'd raise investment. So basically, I just kind of hit the ground running on the investment side because I knew that's what I wanted. I mean, I had people saying, "Oh, come join my real estate team. We'll sell some houses." I was like, wasn't super interested in that. I was able to take my project management skills, into a family office and hang my license there and get a lot of good experience.
Yeah, well, I mean, it was something that you were already passionate about, right? Taking that project management skill set that you had and applying it into commercial real estate. Now that you got your license, so that's awesome. Now, one of the things I want to point out here that I think is absolutely amazing is that the whole appendix rupture. I mean, that had to have been an experience to say the least, right? Because you have this you had this happen. You had to have a major surgery, it sounds like, right? Because they had to completely open you up. And this is one of those things that could be like a life altering moment, because you never know with a surgery like that, or even if you didn't catch it on time. I mean, the worst could have happened, right? And
Or if I was still overseas.
yeah, right, right. And not having that same access to medical care. But it puts things into perspective that not only did you were bedridden for 3 months, but not only did you pursue on recovering, but you pursued getting your license. You pursued something else. You knew it was something you wanted to do, and you said, you know what, I'm a little messed up right now, but I'm going to still press forward with my goals. And what's the next step? Getting my license, taking the courses, getting that stuff done. So being able to do something like that after something so major happened to you, I mean, you obviously have the right mindset to be in the business that you're in. That's for sure.
Well, I would agree with you 100% because my takeaway from all of that whole experience was you have to have the ability to pivot, plain and simple. If you're going to be in, any sort of anything that has any gearing towards being an entrepreneur, you have to have the ability to pivot. And I even think when it comes to people who work for these big corporations, I mean, even their job's not guaranteed. Nothing's guaranteed, and having the ability to pivot, it doesn't just serve the entrepreneur; it serves the average Joe as well.
I like that. I like
There
that.
you
Nice,
go.
nice,
There you
nice
go.
tie in. Nice tie in, Nathan. Hey, so okay, so thank you for that. But at the same time, let's talk about what you came on to the show to talk about, right? So we're going to talk 1031 exchanges. So for the listener that doesn't understand what a 1031 exchange is, can you just give the wave top description of a 1031 exchange?
Right. And this is something that I ran into while I was working for that family office doing a lot of apartment buildings, because a 1031 exchange applies to any investment property or any property that is held for investment or income purposes, right? So a lot more things qualify for a 1031 exchange than don't. But what it is it allows you to basically keep 100% of your money in real estate so long as you buy other real estate. Obviously, like, hey, if I was in the stock market and in a brokerage account where you're trading crypto, like as long as you're trading from stock to stock, crypto to crypto, like you're not paying those gains. You pay when you take out. And this is just the avenue for that in real estate. As long as you keep buying real estate and you play this little game that the IRS has created through the 1031 exchange, you don't have to pay those taxes until you sell in the end.
Right on. Now, for somebody that's doing a 1031 exchange, do you have to put 100% of your proceeds into the 1031 exchange, or can you put some of it and withdraw and pay the tax penalty on what you actually take out?
You can. It's obviously not as advisable, because if you made $100,000 in appreciation, which is what you'd be taxed on according to the federal tax code and according to the state tax code, those are various different percentages. If you're taking out $100,000, but you're leaving the initial however much you had in there in equity, you're basically paying your full tax load anyway. But there's better ways to do that. I mean, you can exchange your money into the next property, put all your value add into it, appreciate the property, do whatever you're going to do, and then refinance it and take money out, and you don't pay any taxes on that money.
Right.
But if you do take out money during the exchange process, or you don't account for 100% of those proceeds to some degree, then you're going to pay taxes on that, and you can, but not
Yeah.
always the best thing to do.
So I wanted to ask that because I didn't know that you could do that. I thought you had to put 100% of your proceeds into a 1031 exchange. And I just heard it on another podcast the other day where somebody explained how you don't have to put 100% in. So I was just, it kind of blew my mind a little bit because, I guess what I thought I knew about 1031 exchanges, I didn't know enough. So I thought that was pretty neat. Now, if someone wants to do a 1031 exchange, when should they contact you or someone like you who can help them guide them to do it correctly?
Right. And so what an accommodator does and a qualified intermediary does is they stand in that gap, because as soon as you want to do an exchange and sell the property, that money has to go to what's called a qualified intermediary, right? It's a corporation. It could be an individual, but we're a company, and we hold the money with the insurance to make sure that you get 100% of it, back should the banks fail or anything like that. So we make sure all your money's insured. And then we make sure all your timelines are taking place, and we have to do all your paperwork. So I would say if you need to do an exchange, give me at least a week, before closing. So you do need to be in escrow. You need to have a signed contract. They need to make sure the title's clean. And after that, you can contact me and I can set up all your paperwork, a month before close, a week before close. I do them, like same day or the day before close, but I'll charge you for that because that's a lot of paperwork to shuffle in a short amount of time. And we're doing so many of them these days. But yeah, just give me some time to do the paperwork. Now, if you just want to kind of strategize and you say, hey, I'm doing this and I want to make sure I can do this, just give me a call anytime. I'm happy to answer those questions.
Right on. So, well, actually, I do have a question about that. Right. So, if you do a 1031 exchange, what can you exchange into?
Let's take a brief moment to hear from our show sponsors. What's going on, everybody? So today I want to talk to you about Buzzsprout. The Average Joe Finances podcast recently switched over to Buzzsprout, and I got to say, I am super happy with the progress. Our podcast is now on every single major platform and reaching audiences that we couldn't reach before, which is just super awesome. So thank you to Buzzsprout for being such a great platform. But also I want to say, hey guys, if you sign up for Buzzsprout and you sign up for one of their paid plans using our link, you'll get a $20 Amazon gift card. So go check them out. It's averagejoefinances.com/Buzzsprout, and we'll make sure the link is in the show notes below. What's going on, everybody? So today I want to talk to you about the podcast editing service that we use for the Average Joe Finances podcast. That is editpods.com. And what I really like about them is it's a subscription-based service, so the prices are fantastic. And not only do they do the podcast episodes for us, but they also make us videos, audiograms, social media caption videos. They do our show notes, thumbnails. It's just fantastic products. Go check them out at editpods.com. Let's get back to today's episode.
It's a great question. And the answer is real estate.
Well, that's pretty simple.
And I mean, some people think that, because it's typically called a like kind exchange, right? And so they're like, oh, well, I sold a duplex, therefore I need to buy a duplex. And that's not the case. The reason it was called a like kind exchange is because you used to sell a business and buy a business, or you sold real estate and bought real estate. So you couldn't cross those over. And now it's just real estate. So as long as you have property, you hold title to it, you can sell that as long as you can take title in the other thing.
Okay, so
it could be raw land, it could be an apartment building, it could be a warehouse. It doesn't matter.
Well, can you 1031 exchange, like let's say you sold a single family home and you wanted to 1031 that into a commercial real estate property? Can you do that?
Absolutely. You can sell 5 single family homes and go into a commercial property. You can sell one single family home if it was worth enough, like in California, and go into 2 commercial properties if they were the right size and price. You can do all of that.
I guess one single home in California can get you there, probably.
Maybe. In Malibu.
Right? Or the Bay Area. So
yeah.
Right,
a shed in the Bay Area, a garage in the Bay Area. Get you a couple.
Awesome. So what about what if let's say I sold a single family home and I wanted to 1031 that into a syndication as a limited partner? Can I do that?
That is possible, but as we kind of covered previously, whatever you're selling, you have title being held, usually as your own name or as a trust or as a limited liability company, for example. You also have to take title in that same entity whenever you purchase a property. So you're not actually buying shares of the syndication as a limited partner. There is an avenue in which you can purchase a portion of the real property as an undivided interest, a percentage, and therefore take title to a percentage of the property. And that's through tenants in common, or commonly called a TIC. There's also another way that it's structured called a Delaware statutory trust, which is a little more, there's a little more legal involved in the sense of it's considered a security. So there's more of that, but a TIC is kind of the Wild West. But as long as you meet the rules that the IRS has laid out, that this is a safe harbor property to exchange into via a TIC, then you're good to go. And I do those all the time.
Awesome.
So
Awesome, man. That's good to know. That's why I asked that question, because it gets a little more complicated when you start looking at it that way, and you're not able to buy in, like as a normal, limited partner buying your shares, right? So
right. There's actually a lot of rules. So before people think, hey, can I sell my little house here that's got like 50 or 100 grand in equity and go into this syndication, come talk to me first. It depends a lot on the syndication and what those managing partners are saying, and how much they kind of need for their investment purpose. There's a lot of nuances there. So basically make sure you got a little more equity than that before you start thinking along those lines. That's usually the most helpful thing.
For sure, for sure. Yeah, I asked that question because I've had a lot of multifamily investors on my podcast lately. So, this is probably something that's in the back of a lot of people that are listening to this right now. It's probably in the back of their minds when we're talking about 1031 exchanges. So, all right. So, with all the nuances of a 1031 exchange, all the paperwork, all the legalities, the timelines, and everything that you have to meet, is it really worth performing a 1031 exchange?
That does depend on the situation. Sometimes people have not seen enough appreciation to make a 1031 exchange worth it. I have people who, not that my fees are outlandish or anything, but your tax basis is maybe $1,000, $2,000, a few $1,000s that you ended up paying in capital gains tax, and it's like, I don't know. You tell me, is it worth the hassle of the timeline and the stress? And, for some people it's not. And I totally understand that. I'm happy to kind of help you walk through that thought process too. But for other people, for example, had a family inherit property from their mother. And their mother bought it back in the day for $10,000 and it was now worth $4 million. And this is in California. So their tax basis was $1.5 million. And I bet just about anyone can think of a better place to go put that than sending it to the IRS. But it does depend on the situation.
Yeah. So what should someone do if they're close to their 45-day deadline and they haven't found a property yet? So, you're going through this whole entire process, and it's got to be stressful when you're nearing the end and you don't have anything to exchange this money into.
Mm-hmm. The first thing I always tell people is, before you even start your timeline, before you even sell, there's nothing that prevents you from looking and making offers, actually. So you can try to get under contract, on a couple things. You can always back out, right? But try to have that next property lined up. And in the apartment space, that's what I have people do. And that's what they're good at doing. They find the property that they know they want, and then they list their property for sale. And you might take a little bit of a hit on the price to make sure that it closes in time. But usually in the commercial space, you can get those extensions a little easier than the residential space. But there's nothing holding you back from doing that. So when it gets close to the 45-day, that's when I start like calling people, say, hey, do you know what you're doing yet? And if there's really, really nothing, like you were kind of down to like one property and nothing else is out there, nothing else is going to work. I understand the market at the time of this podcast is crazy. And I have had people say, I'm just not going to identify anything. And so they fail their exchange. And that's okay. We give them their money back on day 46. They just say as a failed exchange, they're going to pay their capital gains taxes and go on their way. But other people, they really, really don't need to pay those taxes. And then there's other options. It's like, if for as aggressive as you want to be, I mean, would you rather not pay the taxes and make like a 5 to 7% return? There's always an option available for you, right? Is there, you just really think that you're going to get this property, and if you don't, you need to have those backups. We can always put in backups. We can structure your designation notice to just try to be as strong as it can and protective as it can for you.
Yeah, and sometimes though that could be a real tough pill to swallow if you're having to rely on, if your goal was to get yourself something that was like a 10 to 12% cash on cash return, and now you're stuck in a spot where you're making offers on properties that are going to get you 4, 5, 6%. That's definitely a tough pill to swallow. But if you think about, especially if it's a significant amount of money of what you're going to save in taxes, it could be worth it, especially if you're going to wind up, like you said earlier, refinancing and pulling that out, and then go finding, an actual better deal that's going to get you that 10 to 12% cash on cash return. And that's another thing to take into consideration too, because if you're gonna put a large down payment on another property, you can turn around and refinance it and pull that equity right back out and go get, now you can take the time. Now you've got time to go find the other property. So maybe it is, if the numbers work out, and now you just acquired yourself 2 more properties versus just one.
Exactly. So there's a lot of options, and every situation is so different.
Just different strategies, right? Having different exit strategies in your back pocket. That's super important.
With the 1031, preparation is absolutely the key to success. I don't have very many people. The people who go in there just kind of like, okay, yeah, sure, I need to do an exchange. And then, day 15, they haven't even figured out what their game plan is yet. And I'm like, man, this one's not going to work. Or they're not going to be happy with what they buy. Whereas the people who, they literally send me the replacement property before they, before their property they're going to sell has even sold, I'm just like, yeah, it's a done deal. It's just a matter of shuffling paperwork.
Yeah, you had mentioned that earlier too. Like, a lot of the folks you see in the commercial space will have identified the property that they're going to purchase next before they even sell their property that they're going to 1031 exchange. So, that whole thing, it's the same thing with anything that you do in real estate. It's preparation and, putting in the work to make sure that you do all the right things, the due diligence, that you're making sure that you've identified everything. I mean, there's so many little nuances to it, but as long as you have the mindset of preparation and going forth and not being afraid to do the work ahead of time, it shouldn't be an issue.
Yeah, and have your people set up. That's the whole
don't just
have. Oh, I got my broker. It's like, you mean your brokers? Get those people working for you. They want to make money. Put in the work.
Yeah, for sure. Awesome, man. So this has definitely been some great information on 1031 exchanges. Learning a little bit more about them as we talk. Stuff that I didn't even know before. So that's really awesome. So I want to go back to Nathan Webb himself and ask you. So because this podcast isn't just about real estate. We talk about our own personal journeys to and in financial freedom. Besides what you do with commercial real estate, your own investments and being a 1031 exchange accommodator, is there any other asset classes that you personally invest in that you do to get yourself more financially free?
Yeah. I dabbled in crypto a little bit. And wasn't looking to get, I got out in time. Don't worry about it. I made out okay.
Right on.
But that's never something. So I'm a fan of the 10-80-10 portfolio. If people have heard about that, and I like to have 10% in precious metals. Okay. Something that I don't feel can go to zero. 80% things that pay me to hold it, whether it's a dividend stock. Real estate is obviously my jam. It could be a franchise. I did that. But I only put a little bit of money in the speculation in that final 10%. And I was like, hey, Bitcoin and Ethereum and these things could really skyrocket. And I was like thinking I was, I'm definitely no expert. I was like, I think, I'm getting in at a good time. And, I just want to make sure that I'm not keeping it in there. I'm pulling out at the right time. And, I did okay. I could have done a lot better, but I could have done a lot worse too.
Yeah, for sure. All right. Right on, man. I like that. The 10-80-10 strategy. I mean, that's a good way to do it. And having 80% of your assets pay you, that's a pretty safe bet right there. Cause now you've got some cash flow going.
Cash flow is king.
Yes, cash flow is king regardless. So like the things that I've had a lot of people asking me recently, especially, with my realtor hat on, hey, is it worth buying a house right now while the market's so hot? And, I want to buy an investment property. Is it worth it? Well, you have to look at it from the perspective of, will it cash flow, right? If you're going to buy a property and the value goes down, but it's cash flowing, guess what that means? If it's cash flowing, you can hold it till the value goes back up because it will eventually go back up. So even when the markets dip, even in the stock market, you see the stock market drop, it comes back. Now, normally it doesn't come back as quick as it did this past go around. Normally it takes like 2 to 3 years, but none of us are psychics. We can't, predict what's going to happen or exactly going to happen, but you look at the indicators, right? And you can put a good picture together, right? So, so for those of you out there that are listening and looking, thinking about, should I invest? Is now a good time? I've said it before on this show, and guests have said it, and this is a famous quote too. But the best time to invest was 20 years ago. The second best time is today. So definitely go for it. So all right. So enough about that. I'm glad to see that you have these different assets and you have good diversification, right? So you're definitely going about it the right way to support yourself and your family and get yourself to a spot of financial freedom. Now, do you have any last tips or tricks that you would recommend to somebody, to the average Joe that's just getting ready to get started? They just got themselves out of debt and they've got some cash and they don't know what to do. What would you recommend?
I would say, if you have some cash, all your job is providing for your expenses. Don't go into debt to start investing. That's never the right course of action. I think you just always got to handle your money, handle your finances, handle your business, and then invest into something that you feel that you would not need that money right away. So if you're putting, whether it's $10, $100, $1,000, $100,000 into anything, if you need that money like the next day, don't play that game. Like put everything should be kind of like long term. I believe something that you feel like, hey, if I put $1,000 and I don't get $1,000 back, right? It goes to zero, or I can't pull out for 10 years or something like that. And you feel that you can make that investment, make it that way. Don't just be like, hey, I got $100. I'm just going to throw into something. I mean, you can always invest. You can invest with any amount of money, right? But just make sure that you're investing into something that, obviously, do your research. Obviously, I want you to make a sound investment, but don't stretch yourself in the sense that you don't have enough savings to live through an emergency or something like that, or you have to sell those assets at an inopportune time to pay for that emergency. Right? Because you're investing in that thing, whatever that may be, to see the appreciation down the road. So it should be a 5 or 10-year investment. It should not be a 1-week investment. Some people may disagree with that, but for the average Joe, you're investing for the long term, I think.
Yep. No, I like that. And that's one of the things I push too is, you need to have some emergency funds set to the side anyway. So if there is an emergency, you've got that and you're not dipping into your investments or anything like that. So yeah, fantastic, man. All right. So I feel like, Nathan, this has been an awesome conversation and people are probably going to want to know more about you and what you're doing. So where can they find some information about you? Do you have a website, some social media that you could share with us today?
Yeah, I'm happy. I have a LinkedIn. I have a Facebook. Mostly people really want to just talk to me when it comes time to like, hey, I have some questions about something. I mean, you read earlier that my title is a real estate professional. I only say that because I just look at real estate all the time, whether it's a 1031 exchange, whether it's for the REIT that I'm working with, whether it's for my own portfolio and the friends that I'm investing with. I'm always looking at real estate. I'm always happy to just, offer advice because I think advice should be free. And, you should take it with a grain of salt too, because I may be wrong. But I'm happy to just kind of lend my experience. So I'm happy to share an email address where you guys can schedule a phone call with me. Typically it's a 1031 call, but if you just email info@aa1031.com, I'll get you set up with a 15-minute strategy call. Yeah, and otherwise, find me on Facebook, find me on LinkedIn, Nathan Webb. You'd probably do that with 1031. You'll probably find me.
Awesome, man. Yeah, I'll make sure I have all, your social media links in the show notes, as well as your email address. So if anybody wants to reach out to you and figure something out or get on a strategy call with you, they can do that. So really appreciate you sharing all that with us. All right, man. I really feel like I learned a lot today about 1031 exchanges. You probably saw me sitting here taking notes. I love to take notes while I'm sitting here talking to my guests. I have this little black book of I call it my little wealth of knowledge, my little average Joe finances brain, I guess you could say. So thank you for contributing to that today and contributing to our show and to our listeners. I really appreciate the information that you shared with us today, man. And thanks for coming on the show.
Well, thank you for having me. I really enjoyed it. And we haven't even begun to go down the rabbit hole of 1031s yet.
I know this is just wave top stuff. I mean, we'll probably have to have you back on in the future and really get into it, and dive a little bit deeper.
Happy to do that.
Awesome, man.